Hello and welcome back to yet another exciting week on the stock market. In this week's episode, I will cover some of the financial news. I will give an update to my portfolio regarding what has happened within the week. Then I will talk about some of the specific news which are related to the companies in the portfolio as well. So let's start by looking at the news. So as I mentioned last week, the most important news for the coming week, meaning this week, would be the non-farm payroll, since that is the king of key figures, and due to the fact that we have 4th of July on Saturday, the market was closed on Friday, meaning that the news was already out the 2nd of July. As always, I will of course include a link in the description below, both to the Bureau of Labor Statistics and to this Tradingeconomics.com. So here we can see how the unemployment rate has developed, but what is more important here is that we can go and take a look at the consensus estimates, because if we look to the numbers in June, we can see that we are beating the consensus estimate by 1.2 percentage points, and we also beat the consensus estimate in May even more significantly, and also they were beaten in April. So far it looks like we are seeing a recovery in the economy which is better than expected, and that is pretty good news for all investors. The next news item that I want to highlight is the continued discussion about yield curve control from the Federal Reserve, since there was a meeting in the Federal Reserve Committee June 9th and 10th, and since we are now 3 weeks after that meeting, that means that they have made the minutes from the meeting available in their webpage, so we can go and find this 27-page long document. I won't go through all of it, I will simply just highlight some of the details from the discussion, and of course I will include a link in the description so you can go and read it for yourself. So in summary, the directors of the Federal Reserve were discussing the need for yield curve control in order to accelerate the growth in the US economy. However, they were not convinced that there is a need for yield curve control. However, they were united about the decision to analyze the topic further. And one of the things which they discussed in analyzing the topic further was the design and implementation regarding the politics around yield curve control, such as the economic effects. One of the concerns which were raised about using yield curve control is that it will limit the central bank's option in order to control its balance sheet, since the Federal Reserve do not wish to grow their balance sheet tremendously, which could be one of the likely outcomes if they impose yield curve control, and it will be hard for them when they should try and exit yield curve control. So once again, there is no clear answer to whether or not they are going to impose yield curve control. They are currently investigating the positives and the negatives for imposing this tool in the future, so we will simply have to wait and see what they decide to do. Now, let's take a closer look at my portfolio and see what has happened within the week. So the first thing we notice is, as usually, there's a green circle around this week's episode, meaning that my portfolio is actually up in value. So the value of the portfolio has increased by $2,700 within the week. However, $1,000 is newly added capital, so the portfolio is actually only up $1,700 for the week. And since June has now ended, I think it would be a good time to make status over that month, and we can see that the dividends for this month was $240.79. And if we take a closer look at the companies which have paid a dividend, we see that Prudential Financial, Wells Fargo, and 3M are the 3 biggest contributors within the month. What we also note is that the amount that I have received is lower than the amount that I received in March, as expected, since we have seen a lot of dividend slashes and dividend cuts within the portfolio, so that was actually expected. And while we are on the topic of dividends, we can see that I have already received a little more than $9 in dividends for July. And that is from LTC Properties, which paid me $6.86 in June. But since I have invested more, I am receiving a little more. So every single month, this real estate investment trust are paying me $9 with my current investment. And in the future, they are actually going to pay me more, since I have invested $500 more this week into LTC Properties. So I now have a total of $3,000 invested there. The other $500 which I've invested this week has gone into a new holding in JP Chase, since I would like to have yet another bank stock in my portfolio. Despite the fact that I have a lot of financial stocks already, I think it would be a good diversification to have JP as well. And I really believe that there can be some value to gain from having the investment here. So just to illustrate what I'm actually buying for my $1,000, if we take a closer look at the purchases which I have done this week, $500 into LTC bought me 12.9 shares, and with the current declared dividend of 0.19 every single month, that leads to almost $25 after withholding tax every year. When we then look at JP then $500 bought me 5.36 shares with a current declared dividend of 0.9 with a payment frequency every quarter, leading to $16.39. So for my $1,000 I get $41 in extra income every single year. So this is continuing to adding to the snowball, so I hopefully someday in the future will be capable of living from this completely passive income. Now let's take a closer look at some of the news regarding the companies within my portfolio. So let's start by this news from Ford Motor sales, which are declining by 33.3% in Q2, which is quite a lot, but actually less than what was forecast by Edmunds. And that means that the share actually had increased this day, since we were expecting worse numbers than what we are seeing. So despite the fact that car sales are down almost 60%, SUVs almost 30%, and truck sales 26.6%, and we see that daily rental is down 94%, while commercial was off 78%. We still see that the stock was rising 2.5% that day, since we would actually have expected even worse news. However, I still think this is not really a good sign for a company which I have in my portfolio, but nonetheless I will keep holding on to them, since I believe it will be better in the future. The next news item is regarding Realty Income Corp, who is collecting 85.4% of its rents for this quarter. So in June they have actually collected 85.7% of its contractual rent over the portfolio, and we can see from its top 20 tenants that they have collected 82.5% in June versus 82.1% in May and 83% in April. So despite the fact that we are dealing with this pandemic, they are still capable of collecting most of the rent in the portfolio, which means that we should expect that the dividend also will be paid in the future, since when they are capable of collecting this amount of rent, there would be a sufficient flow of cash in order to pay out the dividends, which is really positive news. Then we move on to the most alarming news I have seen within the week. Tailored Brands skips out on an interest rate payment. So currently Tailored Brands has skipped out on a senior note where they have to pay 7%, meaning that they will now have a 30-day grace period to come up with the money before they can actually be declared bankrupt. And of course the stock has dropped due to this fact. Apparently it was only 1.1% they have dropped, but if we go and take a closer look at my portfolio, we can see that they are actually down more than 83% since I have initially bought them. And currently I am willing to hold on to the stock and say, well, what can I risk losing here? 17% more compared to if I hold on to the stock and they are actually surviving this, that I could regain the value. So for now, I will hold on to the stock despite the fact of this really bad news. Then we move on to a much more positive news from LTC Properties, who has declared a dividend which is in line with previous. So for July, August and September, you will still receive $0.19 per share in LTC Properties, which at the current price gives a yield of little more than 6% a year. So I'm really happy that I have actually bought more into LTC Properties, since 6% a year in yield is really good, at least in my perspective. And while we are on the positive news, Simon Property has resumed their payout of dividends despite the fact that they are cutting down the dividend by 38.1%. They are instating a yield of $1.3 per share compared to the last payment, which was 2.1. As one of my viewers pointed out after my last episode, this was actually declared last Sunday, and at the current price level of the stock, this is a yield of more than 7.5%, which is really positive news for me to see, since the dividend has been completely slashed since February. So despite the fact that it is almost a 40% cut, I'm still really happy to see that they are reinstating a dividend. And of course they had to cut it because, look at the yield, it's still pretty high. And investors in general are taking this as a really positive news, as we can see that the shares are up more than 5% after hours, meaning Monday after the stock market closed, the stock rose an additional 5% on top of the 10% gain they had in the regular trading hours. So almost a 15% gain after this announcement. So I'm not the only one who thinks that this is a really positive news for Simon Property. Then we have a news from Bank of America, who expects to hold their dividend at the 18 cents per share until further notice due to this stress test scenario which was out from the Federal Reserve. So at least they're not cutting it, but they are seeing to keep the dividend at the same level which they have previously announced. So in line with previous, you could say. So still a decent news. And then we move on to Wells Fargo, who didn't have the best stress test or the best result from the stress test. So they are actually expecting to cut their dividend in Q3 based on their result, at least according to the CEO, Charlie Scharf. So we should expect that the stock will fall in value as well, since there are a lot of people who's holding Wells Fargo due to its really high dividend. So that concludes yet another exciting week on the stock market. So now we have seen better than expected unemployment rate numbers. We are still waiting to get some clarification regarding this yield curve control, or waiting to see if we will actually see that tool in action from the Federal Reserve. There was an update to my portfolio and I clarified why I invested $1,000 more, that I'm receiving $40 more a year in dividends. So we are seeing that the snowball is continuing to grow despite the fact that my portfolio is down more than 27%. Then there was a lot of updates from the different companies within my portfolio. So remember to comment, like and subscribe, and until I see you next Sunday, bye!